Hello dear students, welcome to Devika's Commerce and Management Academy. In budget preparation, we are discussing various types of budget. We'll see today master budget. Master budget, the name itself is saying this is the final budget. So in this budget, what we do is different types of all budgets together compiled in one budget, that is master budget. Means we are going to consider all the budgets like sales budget, cash budget, production budget, any other information is there. Everything we are going to compile in one budget. Who's going to prepare this budget, master budget? Especially for preparation of master budget, budget officer will be there. So he is going to coordinate with the other departments, other budgets like sales budget, production budget, cash budget, all this information he is going to gather. Then after that he is going to prepare the master budget with the permission of budget committee. Committee permission he will take, then after that he will be preparing this. Simple, this master budget is nothing but it is going to give you the in a glance what is happening in the organization, that you will come to know through this master budget, because you need not to see each and every budget. All the budgets together, it's in the master budget. Like even the profit and loss account and balance sheet, all the information you will find it in the master budget. Preparation is not so tough, just taking the information from all the budgets and then preparing master budget. How to prepare this master budget? Simple one, problem through a problem I will explain it. It will be very clear for you to understand. Just focus 5-10 minutes, you can understand. Now let me explain this one problem, only one problem I am explaining. Master budget, prepare master budget of a glass company for next year. 1 year you have to prepare master budget. What is given to us? First information is sales. Sales of glass A type 3 lakh, glass B type 5 lakh. Two sales are given, means this is sales budget. Okay. Next, after that, direct material cost. Direct material cost 6% of sales, direct wages 20%, 20 workers at the rate of 150 rupees per month. So that if we take these two, we will get the prime cost. Same like cost sheet. Next, factory overheads are given. What are the factory overheads? Works manager 500 per month, means full year it is 6,000, 500 into 12. Stores and spares 2.5% on sales. Sales are here total 8 lakh. On 8 lakh 2.5% is the stores and spares. Depreciation and machinery 12,600. Light and power 5,000. Repairs and maintenance 8,000. Other sundries, other expenses 10% on direct wages. Direct wages are here na. So whatever amount we are going to get on this 10%. And administrative and selling expenses 14,000. So this is the information given to us. Altogether we have to prepare the master budget. For preparation of master budget, what we can do is here, let me explain first. These two are comes under the sales budget, SB, and next these two comes under the production budget, PB, production budget. Okay. So these are factory overheads. Other than administrative and selling expenses, all these items are comes under the factory overheads, FOH, factory overheads, and this is administrative expenses. Okay. And now how do you prepare it? Slowly observe, I will prepare and I will show you. First, what we have information, sales budget related. We can say sales budget. Sales budget, glass A type, ₹3 lakh, inner column I will write, and glass B type 5 lakh, together it is 8 lakh. This is sales budget. Now next these two are production budget. I will keep a heading of production budget. What you are preparing budget, it should be understandable in a proper way. Okay. Now production budget. Heading, side heading. So production budget, what do we have? Direct material. Material 6% of sales. Sales are here 8 lakh, right? So 8 lakh into 6%, 48,000. So can we write it outside? No, directly we'll write it outside, 48,000. Next, direct wages. Direct wages, 20 workers at the rate of 150. 20 into 150. It is 3,000. So production budget is here 51,000. Over. So this altogether we can say it as a prime cost. This is, you can say it as prime cost. $8,51,000. Now what we are going to add? Factory overheads. If we add all the factory overheads, we'll get works cost. Okay, factory overheads. Factory overheads are here. One by one we'll take. Works manager. Works manager 500 per month means 500 into 12. It is 6,000. Next, sales and spares. Stores and spares. 2.5% on sales. Sales are 8 lakh. 8 lakh into 2.5%. 20,000. Next, depreciation on machinery. It's already given. Depreciation on machinery 12,600. Next, light and power 5,000. Repairs and maintenance 8,000. Next, other sundries. Other sundries 10% on direct wages. Direct wages are 3,000, isn't it? 20 into 150, yeah, 3,000. On this 10% means 300. So we'll add everything together. This is 26,000. 26,000 plus 12,000, 17,600 plus 8,300. It is 51,900. 51,900. 51,900 plus 8,51,000. It is 9,02,900. 9,02,900. So this is works cost because added factory overheads. Now I'll use another color, works cost. Now after writing works cost, it's the time to find out gross profit. How do we get gross profit? Gross profit. You know that total sales are 8 lakh. Sales minus works cost. Sales minus all the costs. So we'll do one thing, only sales we want. No, we should not add this. If we add it, it will be added to the works cost. Only works cost we want. So for that purpose, let's not add this one. Only 51,000 we are getting. This is prime cost. This is prime cost. Sales are 8 lakh. Underline it and keep it just like this. Okay. And prime cost is 51,000. This is prime cost and works cost is 51,900. Okay. Now gross profit. Gross profit, how do you get? Gross profit is sales minus works cost. Total sales we have done 8 lakh. Next, what else cost we have spent? Total spent we have cost of 51,000 and 51,900. Together it is works cost. So together it is 1,02,900. Okay. So this is works cost. Gross profit you are going to get sales minus works cost. I'll write it here. Sales minus works cost. So sales are 8 lakh. 8 lakh minus works cost is 1,02,900. It is 6,97,100. Okay. 6,97,100. Now what else is left to get a net profit? You know that selling and administrative expense are the expenses means expenses only. You know that in profit and loss account also, once if you get the gross profit, we used to deduct all the indirect expenses. This is also indirect expenses, na? If we deduct it, we will get the net profit, isn't it? So what we'll do now? Less selling administrative and selling expenses. Expenses 14,000. $6,83,100. So this is expected net profit. There is no confusion at all. First take a screenshot or note down, then after that I'll give you recap. Now in master budget, what is important is information, given information is important. Now as per the information, sales budget we have 8 lakh, and next after that direct material, direct wages, these are all production budget. But anyway, these are all expenses related to the factory, right? So all the expenses, factory overheads, anyway it is expenses. 1, 2, 3, 4, 5, 6, 7, 8. All these are expenses related to the factory, right? Anyway, we are showing here as production budget, but this is also related to the factory only. As I told you, 8 items are there, okay? 1, 2, 3, 4, 5, 6, 7, 8. All these are expenses. If we add up all these expenses, we get a works cost related to the production, works cost. Now after getting the production, what we have to do is gross profit we have to find out. How do we get gross profit? Just to remember or recollect trading account. Trading account. Trading account credit side we used to write sales, right? And debit side expenses. These are all expenses, 8 items are expenses only, okay? 1, 2, 3, 4, 5, 6, 7, 8. All these 8 items are expenses. Expenses, if you deduct it, sales minus expenses, you will be getting gross profit. The same thing, gross profit, we got it. Sales are 8 lakh, okay? Expenses, all the expenses together 1,02,900. If you deduct from sales 8 lakh minus all the expenses, 8 items, you are getting gross profit of 6,97,100. This we did not add administrative and selling expenses because it is indirect expenses, okay? Once if you get the gross profit, just recollect this profit and loss account. In profit and loss account, where will be the GP? GP, gross profit will be on the credit side. So that is this one. And we are finding that administrative and selling expenses. This will be here, administrative selling expenses. GP minus administrative expenses, you will be getting net profit. The same thing we have done. Gross profit minus administrative expenses, so that you got expected net profit. Altogether, what is this master budget is saying is here, so you can expect a net profit of this much by taking the information of sales budget, production budget and other expenses. Altogether, we can say that this is the profit, net profit you are going to expect. That's all. Whenever you get any information, any problem related to the master budget, need not to worry, understand it, what they are saying it. First find out the sales budget and all the expenses deduct it, you will get gross profit. And if you find any other indirect expenses that you deduct it, that you will get the net profit, expected net profit. That's all. This is master budget. Need not to worry, simple. And if you have any kind of problems in your textbook, as per the same method, understand more or less, a little bit additional information or less information will be there. So concept if you understand, you can work out any problem, no doubt at all. Hope you got it. In the coming classes, we'll see more concepts, more subjects. Just stay connected, check out the playlist for more subjects and don't forget to share these videos. Good luck.